Welcome back to The Explainer. I'm absolutely thrilled to have you with us today because we're diving into a highly requested documentary-style breakdown of Week 30 of the GoldMining Europa USD Strategic Series. We're not just going to give you a quick glance at some flashy performance dashboard. No way. We are unpacking the raw reality of long-term trading. We'll look at the exact market conditions, the strategic choices, and the underlying data that drove this specific week. So sit back, focus in, and let's explore the real anatomy of disciplined market execution.
Let's just dive right in. The whole focus of this long-term trading journal deliberately steps way back from that typical get-rich-quick hype you constantly see flooding the internet. What we're focusing on here is calm execution, strategic patience, and most importantly, real progression. When we analyze this series, we're basically watching a live, real-time study in risk management, not some highlight reel of reckless gambles.
Now, before we actually pull up the charts, we really need to ground ourselves in the reality of this account. We're tracking a real cents account. It started at exactly 2,500 cents, which is, roughly 25 US dollars. The big overarching goal here is to navigate the markets until that balance hits 10,000 cents, or about $100. You might be wondering, why cents? Well, it allows for the exact execution of institutional-style risk management algorithms, but on a micro budget. It's real risk, real psychology, and real progression. It's just scaled down.
All right, let's move into Section 1, Navigating the Macro Backdrop, looking at a week of incredibly cautious markets. To really get the trading results, we first have to understand the environment we're operating in. These specific macroeconomic forces completely dictated the market's tempo for Week 30. First off, the European Central Bank held interest rates unchanged, which effectively hit the pause button on the euro's momentum. On top of that, traders were just sitting on their hands, totally cautious ahead of the upcoming Federal Reserve meeting in the U.S. Toss in some shifting economic momentum from preliminary PMI releases and the ever-present hum of geopolitical uncertainty, and well, you've got a perfect recipe for hesitation. These conditions heavily suppressed any sustained directional movement, pushing us into very measured, tightly bound Euro-USD price action.
Moving on to Section 2, Modest Gains, Consistent Execution. This is the micro view of Week 30.
Take a close look at the measured price action here on the M15 Euro-USD chart. Notice something? There's a total lack of wild, volatile spikes. Instead, we're seeing this slow, grinding downward drift. You can clearly spot the automated entries and exits marked out. In an environment where the market is literally holding its breath for central bank news, the trading strategy here adapted perfectly. It didn't try to force big, sweeping trades. Actually, instead, it just capitalized on these tiny, incremental micro-movements right inside that established range.
So, translating that chart into hard data, the MT5 trade history reveals that only 3 trades were completed over the entire week. All 3 were EURUSD sell positions, and each executed with a super conservative 0.03 lot size. Each trade yielded exactly 3 cents, giving us a total weekly profit of 9 cents. Now, a 9-cent profit might sound a bit like watching paint dry, right? But honestly, it's a masterclass in staying quiet when the market is quiet. There's no overtrading, no forcing setups, just precise, surgical strikes.
That 9 cents? It translates to a 0.32% weekly gain. Now, I know in the flashy world of social media trading, 0.33% doesn't sound very exciting, but look really closely at the profit in that growth curve right there. The true victory this week isn't the monetary value at all. It's that beautifully flat, stable growth curve. It's the fact that there was absolutely 0 gross loss for the week. Every single closed trade was a winner. It's literally the perfect illustration of holding a defensive posture in a quiet market.
Let's switch gears to the risk metrics and see how this builds our understanding of the account's overall health. Notice the current drawdown for Week 30. It sits at an incredibly low 0.754%, and the equity curve shadows the balance almost perfectly. This really reinforces the overarching strategy of this entire documentary series. Capital preservation is everything. When macro conditions are uncertain, the primary goal isn't to make a fortune, it's to meticulously protect the capital you already have.
All right, let's step back for Section 3. Zooming out, Lifetime Evolution. We're looking at the journey from recovery to stability.
Pulling the lens way back to look at the overarching journey, the balance has steadily climbed to $2,828.05. That means the total lifetime growth of the account is currently sitting at a very solid 13.12%. You can see the whole story here: the initial deposit, those flat periods, the dips, and the recoveries that followed. This curve is basically the visual heartbeat of the GoldMining Europa strategy over time. Now contrast the calm, roughly 0.7% drawdown of week 30 with the account's actual history. You can clearly see much larger historical floating drawdowns. I mean, at one point it neared 16%, visible in those earlier months. This is so vital to understanding the documentary nature of this series. Real trading involves periods of high heat and massive pressure, and this history proves the account has successfully navigated those turbulent waters to reach where it is today.
This comparison is just incredibly revealing. Back in the early account phase, we saw higher drawdowns, way more volatility, and the system working really hard through a recovery phase. Now contrast that with the current phase, ultra-low drawdowns and measured almost clinical execution. It clearly demonstrates a strategy transitioning toward a far more stable equity profile. The data unequivocally shows a maturation in how risk is being managed now compared to the early days. For anyone building their own trading psychology, this right here is the ultimate takeaway. Survival means you have to evolve your risk management over time.
And the comprehensive lifetime MT5 summary just lays it all bare. A profit factor of 1.39 against historic gross losses cements the core theme: patience and rigorous risk management. It strips away all the emotion and leaves us with nothing but pure, unadulterated performance data. It shows a system functioning exactly the way it was designed to.
Okay, moving to our final segment, Section 4, the road to 10,000, patience over hype. As we start to wrap up this explainer, we really need to bring the narrative back to the long-term horizon of this real trading account, because the journey is far from over. 10,000, that is the milestone. The goal firmly remains reaching 10,000 cents from that initial 2,500 cent starting point. And hitting a milestone of that magnitude in live markets, it's never a straight line. It takes immense psychological fortitude to endure highly complex, turbulent markets, as well as those incredibly slow, sometimes downright boring periods, just like the cautious, quiet environment we experienced in week 30. Which leaves us with this final thought to ponder today. As we look at a week that yielded just 9 cents, we have to ask, will disciplined consistency in these remarkably quiet markets be the real key to surviving the inevitable next wave of volatility? Because ultimately, modest, defensive weeks like this one aren't just pauses in the action. They are the true testing ground for long-term trading survival and preserving your capital. Thanks so much for joining me for this deep dive. Keep analyzing, stay curious, and I will see you in the next explainer.